All right, welcome back everyone to another episode of Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, peoples? How's everybody doing?
Man, oh man, this week has been an interesting week to say the least. I mean, if you traded today, you've seen the stumbling at the end of the day. The market, we had a huge sellout. But let's recap this week, man. I mean, if you guys look on Monday, July 27th, we had a little bit of breathing room. Everybody thought maybe the stock was going up a little bit. There was, some brief recovery, the president decided not to bomb the heck out of Iran. So things kind of looked, it was on the up. Dow Jones was up a little bit, NASDAQ kind of dropped a little bit. But then come Tuesday, I mean, we've seen some sector rotations in there also. I mean, the Dow was a little bit up, NASDAQ kind of dropped a little bit, but it wasn't like a lot of good momentum going on, especially when he talks about like the chip and the chip sector and all the other sectors, like everything that was basically like running like crazy for the past few months, kind of had a bad day. They had a bad day. Matter of fact, they're having a bad week, maybe a bad couple of weeks. And then today, oh my God, if you guys go look at some of those charts, I mean, things were dropping like hot flies. The Dow Jones fell about 2.19% at the close. S&P was down at 1.52%. The Nasdaq was down 1.74%. I mean, those are crazy drop in one day. And majority of that happened toward the end of the day after the Fed Reserve kind of had their FOMC decisions and all this stuff. So let's talk a little bit about that, man. Actually, yeah, let's jump into the Fed meeting, man. Let's get a good Fed meeting overview. What happened? Basically, what I'm seeing is, they're keeping the interest rate steady at 3.5% to 3.75. We had a 9-3 vote with three of them saying favoring a 0.25% hike. I mean, inflation is creeping up. Inflation is creeping up. So let's talk a little bit about that, Wale. Let's talk about the week, what you feel, what happened during the week, and then let's jump into this Federal Reserve decisions.
Yeah, so this week, um, I will say I kind of saw this coming a little bit. Now, this today's drop, I would say, was rather aggressive. But on Friday, or actually last week, we saw, and we'll talk about this more in detail a little bit later in the show. We saw the 30-year yield start to creep up to levels we haven't seen in almost 20 years.
Mhm.
And I texted people in my investment group. I was like, hey, this is, you might want to pump the brakes on being a little bit too bullish about the markets. And now bond yields last week were giving us more of a warning sign. Now we're in a danger zone. So we have 1,000 basis point spread between uh, the low credit quality bond yields and treasuries. 1,000%, 1,000 basis point yield is where I get a little bit scared. The longer we stay above those levels, the more dangerous things get. We'll have to see what happens tomorrow, but not a good place to be. Now, I will say this, despite the sell off. So if you look at where a lot of the stocks are selling off, it's a lot of the AI winners we saw earlier in the year, the
Yep.
Microns, the SanDisk, you know, all of those names that Billy mentioned that had been running into the half point of this year, they're the ones that are getting hit. We talked about this last show, and I think a couple shows ago. Software stocks are seeing inflows. It has
Yep.
continued. Software has been a pretty clear winner, and I'll give some names at the end of the show that have been, some bright spots so far in this sell-off. So this has not been an indiscriminatory sell-off, in my opinion. But I think what is happening is as the valuations of these high-flying stocks have gone crazy, as bond yields have creeped up, they're coming back to earth.
Yep.
So there's nothing wrong with the business. It's just that if bond yields go up, all of these investment banks and these analysts, they have to redo their valuation models because they discount cash flows for future earnings. And I
Mm-hmm.
think all of those names that have been, high flying, they're the ones that are going to get hit the hardest because they've had the biggest run. And at the end of the day, we always say this, you got to take profit at some point. So that's I think that that's what's happening. Um,
Yep. Yep.
The Fed meeting, I'm not surprised that they didn't raise rates, but I thought they would have more um, confidence in doing so. But
Mm,
it seems that everybody on the committee is not there yet, and I think they're a little bit scared. Um, I think they are saying that the economy is in a good place. I take that with a grain of salt. And I also think that they don't want to do anything that will hurt the markets at this point. But I do
right,
feel at some point they have to raise rates. But the problem is the longer this war goes and there's more uncertainty about where oil prices are going to move over the next couple of months, the trickier it is for the Fed to find where they need to be as far as rates are concerned.
right.
We're also hearing Trump talking about new tariffs that are coming down the pipeline.
Yep.
So you got a lot of variables right now happening in the markets, and when you have a lot of uncertainty, you see a 20 VIX, and that's what we're seeing right now. So
Yep. And again, like investors don't like all this uncertainty too, right? So it's like you see the things going on with the Fed, the war, the interest. I mean, the possibly the tariffs coming down the road. Like all of those things make people a little bit nervous to look at the short term. And I'm talking because this is short term. This is not a long term thing. Everybody's like short term. All the investors are basically going to like recalibrate they're thinking about certain stocks and all this stuff. Now, not everything was getting hammered today. If you go look at some of the retail sectors, see some of them were moving pretty well today and between this week also. So the money's rotating somewhere.
mhm.
It's just rotating out of the chips and some of the tech stocks and stuff. So if you can find some of those stocks where the money's going, you can probably do a little bit of job with trading it. But at the same time, also, I think we are back into a day trade type of atmosphere rather than like a big swing. You know what I mean? So again, we are definitely in that time where you got to be careful yet again. Let's move on to some of those earnings, man. I mean, we talked about last week that a lot of companies are going to be reporting earnings. So we have Microsoft reported, Meta, and Qualcomm, ARM, FTNT, LRCX. Those companies reported. One of the ones I was interested in was actually Microsoft. I mean, they did a really good job. You see the numbers going up, you see the stocks going up, but it hasn't really passed that. I forgot what level I had marked. I have to look at it again, but they haven't really passed that level that I marked. So I have a feeling that we might gonna see some. Um, they're probably gonna lose some momentum tomorrow, but we'll see. We'll see if it can hold up or not. But let's get your input on some of those earnings, man. Which ones you like, which ones you didn't like, and which one you are, kind of like bullish on.
Yeah, so Microsoft was the key one that I was looking at coming into this week because this is one that I've been talking about for about a month now.
Yeah.
And the key business that everybody looks at when it comes to Microsoft is their cloud business. And the numbers on the cloud business were amazing. So it says Microsoft was a good winner. They had 18% growth in revenue of 90 billion for the quarter. 90 billion in revenue in one quarter. That's crazy. Adjusted EPS rose 23%. Microsoft Cloud revenue grew 27% to 59.3 billion. So
Wow,
Microsoft
numbers.
Microsoft Cloud is more than half of their quarterly revenue. And it says, and Azure accelerated 43% growth. So because of those numbers, we have now seen the stock up to what 421 from 390's close. So we'll see if it holds. I don't know, but Microsoft has been a clear winner when it comes to cloud. Now, we saw Google also report very good cloud numbers, and the cloud
Mhm.
is an essential piece to the AI build out. We'll talk about that a little bit later, but Microsoft and Google are showing the ability to monetize cloud demand. Another key thing that I also want to point out with Microsoft is Azure surpassed 100 billion in annual revenue. That's very key. And it also says Copilot has 30 million paid seats. And they have a commercial backlog that jumped 84% to 678 billion.
That is
So
wild.
$678 billion in potential revenue in the pipeline. Now, whether they capture all of that or not, we'll just have to wait and see. But Microsoft is one of the biggest winners in this AI build out. And I think they're probably one of the hyperscalers, even though they're investing a lot in AI, you can see the monetization is moving. So
Yep,
they're being rewarded. Meta, on the
absolutely.
other hand, let me see. Revenue did increase by 28% to 60.8 billion. Adjusted EPS missed expectations. Free cash flow collapsed by 91%, and shares were down pretty tremendously after earnings. I mean, after they reported. And it says they increased their CapEx
Hmm.
to from 130 billion to 145 billion. Meta has been one of the names that has not been able to yet monetize their spending on AI. I know that they're trying to get into the cloud business, so that could be something that they can unlock in the future. But right now, they're going to be punished for spending too much money. Lam Research, beat and raise, very good number, 6.72 billion in revenue. EPS was good. Operating margins expanded to 38.4%. They guided higher for the quarter, so they're looking at 8.1 billion in revenue and 2.15 in EPS. So we saw that those numbers looked good. It says the
Mhm.
stock was down after earnings. I'm not sure. Let me see. LRCX. Okay, it looks like it's come back now. Yeah, it dropped, came back, and now it's starting to move a little bit higher. So LRCX, another important business in the AI build out we've talked about. They're more of the picks and shovels. Qualcomm and ARM, I didn't look at those earnings too much, but I saw that both those stocks were down. But one name that was up pretty big in the after hours was in the cyberspace, Fortnite. It says their revenue grew 26% to 2.05 billion. Billings increased 33%. And I think after hours, their full year outlook, they gave better guidance. And if I'm not mistaken, FTNT, that stock is up pretty heftily in the after hours from 153 to 169. So a pretty good jump in their in their stock price after hours. So Fortnite is one of those names that kind of sit in that cybersecurity realm when it comes to AI. And it seems that based on what they reported, that they are seeing some demand in what they do. So that's another name I would definitely be keeping an eye on when it comes to this whole AI build out and specifically in the cybersecurity space.
Yep, yep. I mean, I think overall, like if you look at it, the demand for AI is still out there. It's still growing, right? And this is evident by those companies that like spending all this crazy amount of money for AI build. The only thing I can think of that might be a little bit negative is as those companies are spending more and more, now the B to B, like the other side of it, their clients basically, they have to start figuring out how to spend money also on AI, right? Because I know a lot of companies are trying to scale back a little bit. I've been reading, I read an article where a lot of companies are kind of scaling back a little bit. So when AI and ChatGPT and all this stuff first started coming out, companies basically bought the premium subscription, right, for their team. Like, go ahead, go crazy, figure out what you got to do, figure out how you save us some money. But they quickly realizing that it's like allowing this big premium thing might not be necessarily good for everybody. Not everybody needs a premium value or premium access to ChatGPT or Claude. So now they're like, okay, maybe this team might need premium, but your team only does documentation. You don't need the premium part of like, of ChatGPT. Maybe you get like a lower version of it. So again, we're seeing maybe there's going to be some tearing down where companies are going to start figuring out, okay, maybe we need to get the lower version for this team, get a higher version for this team, and maybe we need to start figuring out how to actually make this beneficial and be able to kind of like recoup some of our investment. There's a lot of money. Like, it's a lot of money. Like, imagine spending $1,000 per employee to be able to use ChatGPT every year, every month. That's a lot of money. If you have 50 employees, that's $50,000 out of your pocket every month that you got to pay for your employees to be able to kind of access whether it be Claude or ChatGPT. So again, I think the proof is there when it comes to the AI being needed and businesses that are needing the access to AI. But I think now we really are in the sifting part of the AI. Like we're trying to
Yep.
figure out which companies are actually more valuable and what in what order. When you look at the cloud business and the memory and the infrastructure and the grid and all these different things, we're gonna start seeing like maybe 3 to 4 companies at each of those sectors that's actually gonna be able to lead forward.
Yeah,
So
I think there also might be a lot of trial and error with some of these companies, right? Because
mhm.
they might think they need one thing, and then after 5 months, 6 months, 7 months, they look at their usage, they're like, we're not really using it as much as we need, so they got to scale back. So I do still believe that AI is going to transform a lot of companies when it comes to efficiency, but they just need to figure out where they need it the most and focus on that. And a lot of companies may not, how should I put it? They may not have it figured out just yet, especially large companies, right? Because you're looking at, okay, we're spending X. Does it increase output with this? Does it increase output with that? And if the output isn't there, it's like, why are you spending the money? So,
I spend the money.
it's one of those things where there's a need, but companies are still trying to figure out how much of a need. So
Yep.
yeah, very
Yep.
good point
Yep.
as far as like, trying to figure out companies trying to figure out what the need is for their business. So
Yeah, yeah. And if you think about it, also investors are like, show me the money. Like where where's the money? You know what I mean? I think Microsoft kind of proved it too. Like Microsoft, this growth is amazing. You know what I mean?
yeah,
They kind of prove like, hey, we're making money. Meta kind of did it, right? Alpha, Google kind of faced the same type of questions, like show me the money and all this stuff. The other company I'm looking more is your baby, man, Vertiv. I mean, that thing dropped after earnings. I don't know what happened to it. It looks like I don't know if they missed guidance or they missed like revenue or what. But again, looking at some of those companies, like investors are starting to hold those companies like to the fire, basically. Like show me what you got. I mean, even if you look at SK Hynix, I think they reported like a growth of more like 500% or something like that. They still dropped because investors maybe want a 1,500% growth instead of 500% growth. So
yeah.
earnings is not enough anymore. I think investors are like, we want to see where the profit is. We want to see the
Another
growth.
another thing you got to also understand is like when you start to look at those names that were up like 90% for the year, like year to date and like a couple of weeks ago, the
Mm-hmm.
the thing is the expectations of what you need to deliver just go up. So
Yep.
there's a company, Amcor, that I got in back in March. Amcor ran 90 from like 90% in 3 months. They reported yesterday, and I guess their guidance was below expectations.
Mm.
The stock dropped 23%.
Damn.
Today is down 6.48%. There's nothing wrong with the business because margins increased, revenue was good, and all of that stuff. But when you're up 90% in 3 months, if you don't blow it out the water, you're going to get penalized. So
Yeah. Yeah.
their symbol is AMKR. To me, they're a good business. They have partnerships with NVIDIA, and they also have partnerships with um, Taiwan Semi when it comes to chip packaging. So they're pretty much right back to where I got them at. So I sold some, but I still have my position. I'm not completely out of the position, but to me, they sit in a very critical space in the AI build out when it comes to packaging the chips. So we'll see what happens long term. But again, this is why I think we said this couple weeks ago. There's nothing wrong with trimming your position on some of these high flyers because at some point the quickness at which they got to those levels, they can come right back down.
But back down.
So
Yep.
yeah,
Yep.
so
Yep. But we have one more, two big giants reporting tomorrow,
mm,
Apple and Amazon,
mm,
So we'll see this AWS growth and see how it is. Is Amazon CapEx, kind of match the profit they're making? I don't know. We shall see. Apple also will see. Are they monetizing from this AI thing? Because we haven't really heard anything from Amazon in terms of like AI and stuff, but they could be monetizing in terms of, ChatGPT got to pay them a rent to be able to sit in their app store. Cloud got to do the same thing. All these other AI companies have to do the same thing if they want to be downloaded from the App Store. Which brings me actually to a good story. ChatGPT, OpenAI is actually exploring coming up with their own devices. I don't know if you talked about this, but They just want to come on their own devices because they want to be able to, capitalize on that 15% that they're paying Apple every time when somebody downloads it. So I don't know, man. We'll see. But that's gonna be interesting if they come up with their own device. I don't know how they're gonna look like. But again, two big giants reporting tomorrow. What are your expectations on that one? Especially with Apple, man. Apple just hit an all-time high, just by the way, guys. Like
So so I have been very I wouldn't say bearish, but I've said Apple is not a growth company. I've said it many times. I've been very animate about that. And so far, Apple has continued to climb higher.
mm-hmm.
And it seems that their spend discipline on AI is paying
It's
off
paying off.
because they haven't really spent any money. They've been sitting on the sidelines, just waiting and watching the landscape and seeing what has been going on. And I've been saying Apple been dead money. I've said it many times. I have so far been wrong. It looks like when we hit that low in the end of June, since then the stock has continued to climb higher. So the market is seeing something in Apple. It looks like ever since their last earnings report in May, was that May or April? Late April. They've been moving, and it seems that their spend discipline, they're being rewarded for it. Now we'll see what they say tomorrow, but yeah, I have Apple has not been a stock that I have been very fond of. I've been
They're back
very
on top though.
and now they're back on top as a $5 trillion company. We'll
Yep.
see if that holds in tomorrow. But man, I'm actually surprised. I'm surprised. I'll be honest with you. I'm surprised.
This one remind me what DJ Khaled said. You ain't believing us? God did. God did. If Tim Cook can talk to you right now, I think that's what he'd say.
and as Apple has been steadily climbing, Nvidia has now traded below $200 a share.
Yep.
So man, I was wrong. So we'll see what they say tomorrow. But so far, Apple has been one of the clear winners in this whole, you know, in this whole last like couple weeks. So
Yep. Well, let's move on to the next, man. I think while everybody's watching NVIDIA, Microsoft, Meta, and all these things, one of the biggest charts in the market right now, I don't think a lot of people are talking about it. It's not even a stock, is a 30-year treasury. I mean, we're sitting at around 5.2%. That's levels that we haven't seen since like before the global financial crisis of 2008, I think. That is a crazy, crazy stat. And you guys got to really, really, really pay attention to this. And remember, like when treasury yield goes up, bond prices go down. The bond market is basically telling us, like, if you want me to give you America money, you gotta pay me more money. I gotta make more profit from that. So that's basically what's happening right now. So Wale, man, let's break this down for the people because I think this is a very, very important chart that outside of the stock market that people need to pay attention to. I know you talked about a lot about this in the past, but let's talk a little bit more about this.
so one of the things I've been very animate about, I probably said this a million times. I said the bond market you will smell danger first in the bond market before it shows up in the stock market.
Mm-hmm.
And we started to smell that last week. Now, when we saw what bond yields were doing during Kevin Warsh's press conference, they just kept climbing up, kept climbing up, kept climbing up, kept climbing up.
Mm-hmm.
So what is happening now is, to me, inflation expectations are increasing. We're also seeing that the national debt is approaching 40 trillion. The cost of servicing that debt now is over $1 trillion a year and climbing. So the more debt the government issues, and we all know that the government cannot function without issuing debt, the more expensive that debt is. And the fact that we are at levels that we haven't seen since 2027, almost 20 years, tells me that this is not a good environment for stocks. As I said before, a lot of these analysts and these big banks, these institutional investors, when they build their models about what stocks should be worth today and their future projections, they use interest rates to discount future cash flows. So when interest rates move higher, those discounts on the cash flows are higher. You have to discount them more because borrowing money is not cheap anymore. So if we continue to remain elevated above these levels, I said that the spreads I've been looking at are at 1,000 basis points now. We're not in an environment that's conducive to stock growth. Now, spreads could come down, bond yields could come down. It's possible. But from what I'm seeing in the background, I just don't know if that's what's going to happen. So, you know, some of these high flying stocks like Microns, Intel, SanDisk, like they're in correction territory right now from their all time highs. And if yields stay elevated, we could see more selling.
Yep. Yep.
That
Yep.
is that's not a good thing. I'll also say I'm wondering how this is going to affect the private credit market because we saw early on this year, we saw a lot of issues in the private credit market. And with yields going up, I wonder what people in that space are thinking, especially investors. Are they going to be looking to pull money out? Also, you got to understand too is that when yields become higher, institutional investors they're compensated more for taking less risk
Yep.
because this is how I look at it. And for us individuals, it's not quote unquote attractive. But a business could be like, okay, if I got $100 million in cash, right? I can put it in treasuries for the next 10 years or 30 years and basically get 5% of my money with no risk
Yep.
rather than putting it into the market where there could be ups and downs
Yep.
over that time period. So as bond yields get a little bit more attractive, people start to not take on that much risk. So that's something that could be happening over the course of time if we remain elevated. So
Yep.
it's not it's not a good thing for stocks at all. We saw what happened today. It's just a matter of do we bounce from here or do we continue to see selling in the market?
How does that look for the banks? Like I'm talking about JPM, Bank of America, all of those big companies, all these big banks. Like how does that are they the winners in this? Are they the losers in this? Or where do they fit into this scenario?
So they are winners in the sense that how should I put it? The rate at which they lend money helps them.
Yep.
The only thing is if rates start to go up, maybe they have less volume or less people applying for
Applying. Yep.
loans
Yep.
because
Yep.
because borrowing money gets more expensive, you might have less volume.
Yep.
When but if people are needing to borrow money, banks are going to get more, you know, bang for their buck because they're going to be lending at higher rates. So it is good for them, but it also depends on their net interest margin. So basically, what they're paying on deposits versus what they're making in interest on loans, that could start to increase. So it could be good for the banks in the short run. But
Yep.
the volume at which people are borrowing might start to come down because you know you look at mortgage rates. You know, nobody wants to. Makes houses more expensive.
Right. Right.
Nobody wants to buy at these rates because of that of the to where the 10 year is trading right now. So
Yep.
it goes both ways for banks.
Yep. Yep. And then if we talk about like the small caps, especially IWM and all the companies that are within there, how does that impact them? Because I know we talked a lot about that. In my opinion, IWM is very vulnerable now when it comes to this,
Yes, yes,
in terms of, so 5 point something percent is too high.
yeah. So small caps, hyper growth companies who are still in the growth phase, they need to borrow money to grow. As borrowing money becomes more expensive, they have to service their debt. It becomes more expensive. It eats into their margins and their profits. Not a good thing. So if rates stay elevated, IWM is going to be one of the biggest losers.
Yep.
Like
Yep.
that's just the name of the game. They're going to be one of the biggest losers. And so far, IWM has outpaced QQQ. and SPY for the year so far.
Mhm. Mhm.
So if we see elevated rates, it could be a sign that IWM could be coming back down to earth. I think IWM was down what today? Almost 1.75%.
Yep.
So
Yep. Yep.
yeah,
Yep. So bottom line, and the way I look at it is, if this rate stays high, the Wall Street they have a problem. You know, the United States government is probably going to be the biggest money grabber when it comes to this. So, because if Uncle Sam would pay me 5.2, 5.6% without having to worry about earning calls or guidance or CEO messing up or whatever, that's a no-brainer. I just put my money, especially on like billions of dollars or even trillions of dollars. I mean, earning 5% on $1 billion, come on, guys. Like some of these guys, it's no brainer, man.
with
Like they would
with
just
with no risk.
no risk. You gonna get that money. So again, it just makes it's a very sensible decision for those companies. That's why you see money leaving the market now. I mean, I also think about a company like Apple. Haven't really put too much money out there, sitting on tons of cash. I mean, like you say, they might turn around and be like, "Hey, we're just gonna loan this money to the government and get paid 5% on it and be good to go." You know, so
Same with Berkshire.
Berkshire, yeah, damn. I mean, man, that guy is still like a genius. He's still like a genius. Like, remember when he was sitting on like billions and billions of cash, trillions of cash, just sitting there, and everybody was like, "What is going on with Buffett?" You know, and now he's like I said, he sounds like he was a genius. Like he just kind of knew what the environment was about.
Yeah.
Um, that's crazy, man.
Like if you think about it, like $100 million at 5% is 5 million a year. So that's a free $5 million a
Free,
year with
free,
no risk.
free.
So again, it becomes more attractive to be in bonds if you can, you know, wait things out and you don't necessarily need the money.
Right. That's
So
amazing. That's crazy. But let's move on, man. Let's talk about. I mean, we talked a little bit about Microsoft and Azure, Microsoft, Amazon, AWS, and Google Cloud, and their importance when it comes to the AI build. But let's talk a little bit more about that. Like, I think these companies are going to benefit. I think we talked a little bit about it. Like, these companies are going to benefit tremendously from AI growth. You know, where companies spending more and more on the storage of data, storage of their models or whatever, or if they kind of like if you as an employee go in and you know put in a prompt into ChatGPT or even Cloud or even Claude, that has to be stored somewhere. And with millions and hundreds and millions of people now putting hundreds and thousands and millions and potentially even billions of prompts on a daily basis into ChatGPT, into AI, into Claude and all this stuff, all is going to be stored somewhere. The clearest winner are the guys who are owning the cloud. I mean, we talk about all of them all the time: Microsoft, Amazon, Google. Those are the clear winners in the long term. You know what I mean? So let's talk a little bit about that, man.
so we if you have been paying attention to our show and if you've been paying attention to the AI build out over the last couple of months, we can kind of see that things are happening in phases, right? Where we've seen the picks and shovels that are needed to be put into the data centers, the chips, the networking, the cooling, the memory, all of the hardware that is being bought and being put into these data centers. Now, as we start to move into and I still think it's still early, but as we start to progress through the AI build out, one of the things that you have to understand, I recommend that everybody sort of learn about this, is inference. Inference is the most important, it's one of the most important pieces in this whole story because the inference is the response you get when you put in a prompt. It's the
Right.
video that's generated when you put in a prompt, or the picture that is generated, or the PowerPoint presentation, or the code that comes at the end of at the end of that prompt. And you have to understand that as AI adoption increases, more and more and more and more and more people are going to use AI, right? And I keep saying it, if you don't use AI now, you're going to lose position to someone else who does. Like even for me, I have over 15,000 chat GPT conversations, me alone, 15,000.
That's crazy.
Because a lot of the data, the coding, and all the things that I've kind of gone through over the last couple of years. Companies are still figuring out how to use it, but at an enterprise level, their capacity is a lot more.
Yeah.
And when you look at cloud usage, most of cloud usage is AI inference. Part of it is training, where the models learn. You train the models, they understand where to grab data, how to answer questions, and all of that
Right.
stuff, and they learn the process. But at the end of the day, people are concerned more about the answers that they get, what the output is, and how reliable. We're never going to get to a point where AI is going to be flawless, but how reliable that data and how reliable the information is. And people are just going to keep using it and using it and using it.
Yeah.
What Microsoft, Google, Oracle, and Amazon are doing is they want to increase the capacity that their cloud systems can handle. And they're putting in all of the investment now so that in 10 years or 5 years or 15 years, let's just assume we're getting 9 billion prompts a year. I'm just using a wild number. That number could grow exponentially to 15 billion, 20 billion, 30 billion. So as that increases, you need more cloud capacity. If you look at Google's earnings report, yes, the stock dropped 82% increase in cloud revenue in 1 year. 82%. You go look at Microsoft, more than 50% of their revenue is coming from cloud. So when you see where your revenue is coming from and where your growth is coming from and where your highest margins are, that's the business where you're looking to invest. And that's what they're doing. So right now, they're being penalized. We'll see what Amazon says tomorrow. No one cares about the Amazon revenue on the, on the on the consumer side. They look at the revenue on the cloud side. So they want to see what that's going to look like. So Google showed good numbers. Microsoft showed good numbers. Amazon we're still waiting on. Oracle we're not going to get until September 8th, I think it is. Oracle is still in an infancy stage, so they're investing a lot more heavily because Amazon and Microsoft have the more established cloud business. Google's coming along, Oracle's coming along also, and now Meta is trying to jump into the business. Oracle, hopefully, if they can execute on their backlog and turn that into revenue, they could be a good long-term winner. The stock is getting punished now. Let's just be 100% upfront about that. But if you look at where they could be in the next 5 years, 10 years, if they're able to monetize that backlog in the cloud capacity, to me, they're going to be a clear winner. So when you look at this whole AI race and you're looking at where things are going to be in the next 10, 15 years, the cloud winners, in my opinion, are going to be the biggest winners because they're going to have the infrastructure and the capacity to do it. And then also too, as you have more inference and you have more prompts and people using AI, energy,
Yeah, that's another
energy is
one.
is going to be needed. And you can see Google already bought an energy company not too long ago because they're like, we want to get in
Mhm.
front of this bottleneck. Energy is going to be needed because you're going to be processing more and more and more and more and more data over time. So that's what I'm seeing. Um, you know, whether or not the amount of spend that they're going through now is needed for what's going to be done in the next 5 or 10 years? That's the question nobody knows. Like, I think I've used this example before. Again, if I'm hosting a party and I'm expecting 100 people and only 50 show up, I spent too much money.
Yep.
And the question is, okay, well, what do I do with the excess? Here's the thing about cloud is that you can give your capacity to someone else and they can use it. So that's the thing that is available, is that because I think that's what Meta's trying to do. They have commitments, but they're like, okay, if we don't use these commitments, we can sell these commitments to other people.
Yep.
That's why compute futures are coming, because this thing could be expensive. So to me, if you're looking at the hyperscalers, um, I don't know what Apple's play is. We'll have to wait and see. But I think Google and Microsoft, to me, and Amazon, I have nothing against Amazon, but I just know that, they're not they're not really a tech company to me. I don't know. I'm a little bit biased, but
Yep.
Google and Microsoft, to me, are going to be winners. I also feel Oracle's going to be a winner as well, but Oracle's going to be a bumpy ride because they're still in the infancy stages developing that cloud business.
Yep. Yep. I mean, at the end of the day, you just got to think about it. Who's going to get paid every time you use an AI agent or bots or whatever? Who's going to get paid?
Yep.
Which
Yep.
company? That's it. That's all it's going to come down to. If you can build again an ecosystem based on that, you will be able to find a multiple companies along that route to be able to invest in. But at the end of the day, it just comes down to that.
And also, too, Microsoft and Google sit in multiple spaces when it comes to
Mhm.
AI. They sit in the chip space because they make their own chips. They sit in the cloud space. They also have their own model. And what's the other one? Google has an energy company
Yep.
under their belt. I don't think Microsoft does yet, but you also understand that they're also building on top of this, they're also building into the quantum phase when that comes later on. So um, I will say this, man, if we get a nasty sell-off because interest rates are crazy and I don't know, the war gets intensive, there's going to be some opportunities to buy some clear winners in this space, kind of like what we saw back in 2025 during the what was that called? Where the tariff tantrum last year, and then also what we saw back in COVID. So look at the segments of the build out that are going to be long-standing businesses, and to me, that's where you should be positioning yourself long term.
Yep.
So those are the names and the areas where I feel are going to be some clear winners. It's just not going to happen overnight. So
Yeah, I think there's a lot of benefit to those companies. So again, I honestly think like we're still in the beginning stage of seeing who's going to be the winners, who's going to be the losers in this whole thing. So, but
mhm.
you can clearly say, I mean, based on what Microsoft reported, 43%, that's a crazy number. Like, just keep an eye on that. And they're telling you, hey, this is where the money is going. So, we shall see, man. But let's move on to ASML versus China. Or is it China versus ASML? I don't know what to call it. China basically just launched a homegrown type advance of lithography chip printing machine that is spotlighting how European chip tool maker ASML. I mean, again, they are coming for if you think about it, like imagine a competition for TSM. But TSM is kind of like a Taiwan. I don't know if it's Taiwan is a Chinese company, but it's sitting right there. Um, but imagine like somebody coming out and producing something that's similar to how TSM is doing operation. I think that's what China is basically doing for ASML right now. So let's talk a little bit about that, man. I don't know how that's gonna impact ASML. I don't know if it's gonna, you know, threaten them, or is it gonna be more one of those like, oh, China's just making another something that everybody else may know how to make already. So
So the way I look at it is the moat that ASML has had in some of the lithography machine making. China has now entered that market. Now, are they going to be able to match the scale of ASML, I don't think that that's going to happen anytime soon. But what the market is now saying is we have to discount ASML's price because that moat could be deteriorating.
It'll be gone. Yep.
So DUV lithography machines is something that ASML has dominated and basically had a monopoly on for the last 2 decades. Now there's a new company that is entering that market, but they still don't have, again, they don't have the capacity that ASML has. So they're saying approximately 5 machines are reportedly planned for 2026 and roughly 20 machines for 2027. So again, it's not a large scale type of operation yet. So I always say yet. Now, the one area that ASML still dominates on is EUV technology. So China has not really entered that market, and that's the area that's needed for more high advanced chips that ASML still has basically a chokehold on, basically a monopoly. But the DUV business has some competition now. So um, we've seen ASML go on this crazy run the last, you know, couple of months. I'm looking at the chart right now. This was a stock that was trading at 734-ish back in 20 July of 2025. That stock almost hit $2,000 a couple of months ago. So we will see what they say moving forward on their earnings. But when you lose a business, I won't say you lose a business, but when you have competition in a business now that you've had a chokehold on for 2 decades, stock has to get repriced.
Yep.
So we'll
Yep.
see what they do. We'll see if businesses start to transition towards those companies. To me, I don't know. I do think that the EUV business, as long as that's still intact, I feel that ASML is still a good company, but Wall Street is penalizing ASML for that news, and it is something to definitely watch and be aware of as we look at things moving forward for their business. So if you're an
But the
ASML investor, listen to those earnings calls.
yeah, you better pay attention. But the other thing is also like, I mean, this is what happens when you try to block China from buying your most advanced chip. Because they're gonna figure out a way. They're gonna be like, all right, fine, we're just gonna build our own. And I think that's what's happening. It's like you don't want to sell us your most advanced chip. Guess what? We're gonna build our own thing here, and we don't need you after a while, you know. But we know with China, it's always think about we're building factories that can manufacture things on a crazy level, on a crazy speed, and timely, and with good quality. Now, I don't know how long it's going to take before
Correct.
companies
We
will be
don't know.
like, yeah, companies going to be like, oh, I think we're going to China. We don't want you SMO anymore. It's cheaper to go to China. They will make it for us. I mean, chip is kind of a little different, right? I don't know if you really want your chip built by Chinese companies. They might put a backdoor in there or something. But at the end of the day, this is what happens when you don't allow for companies or countries to buy your advanced chip. They're just gonna figure out a way to do it on their own. So they're back against the wall. They're fighting back basically.
Yeah.
That's what I think.
And if we look at the AI race, it's really an arms race. And so far, the United States is winning the arms race, right? As far as having the most advanced models, having the best chip companies. Like they're most of these companies are all housed in the United States.
Right.
But one thing that China knows how to do is how to make things cheaper and more accessible
Accessible.
for for everybody. Because I mean, look what they did with manufacturing.
Mm-hmm.
You know, like
Yep.
you know,
They control that thing.
they got a chokehold on rare earth metals.
Yep.
You know, remember Tesla was the first company to mass produce EVs, and they were the first people to, the first company to really turn that thing into a really good business. Now look at BYD. Look what BYD has done.
Yep.
They have outpaced Tesla when it comes to providing, EVs globally. And if I'm not mistaken, to me, they're better quality cars too.
Better quality. Yeah.
So, you look at uh The shoe game.
Yeah.
Who would have known that? 10 years ago, you never saw, I wouldn't say maybe not 10 years, maybe like 10, 15 years ago, you never saw NBA players sponsored by
By Chinese.
Chinese shoemakers.
Yep.
Now
Yep.
you got dozens. Steph Curry,
Steph Curry, one of the biggest deals.
one of the
Yep.
biggest names in basketball, has a shoe deal with a Chinese company. Klay
Yep.
Thompson,
Yep.
Kyrie Irving, Dwayne Wade. Who would have known that China would have entered the shoe market and grabbed some of the biggest names in the NBA
Yep. Yep.
and give them a signature shoe? That was back in the day. It was either Reebok, Nike, or Adidas.
Adidas. Yep.
So
It's no longer, they're no longer
yeah,
kings. They got dethroned.
yeah. So when China enters the market, you can't just fall asleep on them and just ignore it.
Exactly.
You have to be aware of what they're doing and how it's going to affect companies that play in that same sandbox on the
Yep.
US side.
Yep.
So
Yep. They're definitely going to disrupt. They're going to disrupt that market
yeah, they're
big time, big time.
disruptors. Yeah, that's
Yeah.
the word, disruptor.
Yeah.
Yep.
The other thing too that they always do is like once they figure out how to make it and make it in mass, it gets cheaper. It gets cheaper.
Exactly. Exactly.
So they make it really, really hard for you to compete. Like they make it really hard, you know. So it's crazy. But
Yeah.
we'll see what happens with ASML in the next few years or next few months and see what the stock end up. But I think they definitely have a threat in their hand, honestly, in my opinion at least. So let's talk. I need we touched base on a little bit on this. We've seen the market is selling some of the first AI winners, like the early AI winners. It looks like, we can kind of see like the market's kind of like just selling those off and repricing those numbers. I mean, I don't think it's a surprise. We talked about this a lot. Even if it wasn't for the economy or the interest rate and all those different things, I think honestly, like you going into like the third quarter, almost the end of the year and stuff, you have to start taking profit. You have to start paying some of those, take some profits from those, crazy runs that you had. So I think honestly that's what's happening. The problem I think like a lot of people don't pay attention to is like the market don't just drop all at the same time, right? It
Correct.
goes in levels. So I think people are like, oh, it's running today. No, I mean it's running today, but is it creating higher high or lower high? So if it's not doing that, there's some selling happening, right? The market's still gonna be selling until it gets to a specific number that everybody agree on. Nvidia is maybe like $150 for now. ASML might be going to like $1,000, or I don't know, Microsoft might go to like 450 or something. It needs to go to a specific number that everybody agrees on. Then from there, we can start thinking about, okay, what is the next earning looks like? Did they deliver? Did they over deliver? Are they doing good? Is there profit and all these different things? So we're definitely seeing repricing of the market right now when it comes to those AI stocks and stuff. So let me get your input on that.
Yeah. So I will always say markets happen in cycles, right? And even if a stock falls 15%, 20%, 30%, that to me just tells me that the value of what it's worth today has gone down based on various factors. What you need to do as an investor is to look at, is this deterioration in price based on deterioration of the business? If the answer is no, then it might be a good name to buy at a cheaper price, right? So you have to understand, just because a stock missed analyst expectations that has been up, like, I mean, let's just be honest with you. A stock that's up 150, 200, 90, 100% in a 6 month period is freaking ridiculous.
Crazy.
That's just, that does not make sense. That's not a normal move for stocks.
Mhm.
So with that comes higher expectations, right? Like, again, I've used this example before. It's like an NBA player, right? If you are used to scoring 30 points a game and we're expecting you to score 30, and then you're scoring like 28, and you come back and you say, hey, I want a max deal. As an owner, I'm gonna be like, yeah, you kind of fell off a little bit,
Right.
because Like if you've been scoring 30 consistently for the last 5, 6, 7 years, and then you go to 28, I'm gonna be a little bit hesitant to give you that max deal. So that's what's happening with stocks. When you see stocks that have gone up that much that quickly, you have to be able to tell yourself that the expectations of what people are going to want from the stock is just going to keep going up. Now, if nothing has changed under the hood, if the business is still intact, but the expectations have changed, then this might be an opportunity for you to get into the stock at a cheaper price. Because again, understand what's going on with the business. So I looked at AMKR is a stock that got hit hard yesterday. It's down 23%. But when I looked under the hood and looked at the earnings report and I looked at the business still looks like it's in good shape.
Right.
Now, does it mean that the stock is going to go up from here? Probably not. It might sell
Right.
off a little bit more. But a saying that I posted a couple of days ago that I stand by is this: good investors recognize quality. Great investors combine quality with attractive prices. So if you can find a good quality company at an attractive price and you're willing to wait it out and be patient, you'll be rewarded. So I'll just leave it at that. So,
That's
you
a
know,
fact.
look at the companies that are down 30%, 40%, 50% from their highs. And from there, look at the quality of the business. If nothing has changed, growth still looks good, revenue still looks good, margin still looks good, cash flow still looks good, profits still look good, then it's just market reaction and profit taking. And that doesn't determine what a stock is the business is worth.
Right.
That just tells you what the market is willing to pay for the business today.
That is a fact. That is a fact. Now, as we turn the page to tomorrow, man, I mean, as we wrap up here, we got GDP numbers coming, we got inflation data coming, and then after the bell tomorrow, we got Amazon and Apple stepping into the earnings spotlight. So that's going to be the biggest thing for us tomorrow to see where those companies end and how the market react to their earnings. Also, I'm gonna keep an eye on Nvidia. Also, I think if Nvidia can reclaim that $200 level, maybe we can kind of have some semi kind of rally a little bit also. But I mean, we are seeing some AI correction. It's not a bubble that most people think. It's AI correction. Just numbers are being readjusted a little bit. But again, there's opportunities being created. I mean, people were buying Nvidia when it was over 200. I mean, right now it's below 200. So you might start thinking about that a little bit too. So let's get any last minute advice from you going to Friday and also looking for those two earnings that's coming up.
Yeah, so PCE tomorrow, Apple and Amazon's numbers will be important to what we hear as far as what is going on with the business. Amazon, it's the AWS business that everybody cares about. No one cares about the other stuff.
Yeah,
Apple, I'm interested to see what happens with Apple because again, I did not expect them to be at all-time highs based on what they've been doing over the last couple of months.
yeah.
I have been wrong with Apple. I'll also be looking at what bond yields do because again, we are in the danger zone in the bond territory. The longer we stay in the danger zone, the uglier things could get for stocks. Um, Software stocks. Let me give you some. I've been talking about this rotation uh the last couple of months, but let me just give you some. I'm just going to go through a list of software stocks that have just had tremendous runs. Datadog is up 109% in 3 months. Snowflake is up 106% in 3 months. Uh, this name is down, but MongoDB was up 3% today. It's up 4% in the after hours. And over the last 3 months, it's up 31%. Uh, Intuit is up 26% in the last month. Let's look at ServiceNow is up 18% in the last month. up 13% in the last week. Workday up 18% in the last week, up almost 40% in the last month. Adobe up 27% in the last month. Team Atlassian up 34% in the last month. Samsara, which is a name that I own, up 21% in the last month. Salesforce up 20% in the last month. DocuSign up 31% in the last month. Figma up 34% in the last month. And one more on my list. Let me see. Looking at the last week, IBM is only up about 7% in the last week. So if we look at where the money has been going, right? The headlines are saying, oh, the market is selling off. Always tell people when the market is selling off, look at what people are buying.
Not selling up, they're rotating.
They're rotating. They're rotating. To me, a sell-off is when everybody's getting smacked, where it's indiscriminatory selling. Yeah. That's not what we've seen. Because SPY and QQQ are so heavily weighted towards AI, when AI gets hit, those indexes get pushed down a lot more. So when you see that, the lens that you need to go look at to get a clear view of what's going on is look at RSP. That will give you a clearer view of what is going on in the overall market. And if I'm not mistaken, RSP is beating SPY and QQQ so far in 2026.
Yep. It is a fact.
If nobody told you. But that index is outperforming. And the reason why it's outperforming is because there are other sectors in that space that are doing well. And I'll give you a couple names. Energy, XLE is up 30% this year. Materials are up this year. My list disappeared. Let me go back. Materials are up 16%. Consumer staples are up 13%. Biotech is up 22%. Real estate's up 15%, and industrials are up 18%. So those sectors are a little bit more spread out within the RSP, right? It's not just concentrated in a lot of the AI names. So because of that, you're seeing the equal weight outpace the cap weighted. So are we in a sell-off? Yes, but it's very concentrated in the winners that we saw earlier in this year. So you have to pay attention to that information to know that there are still opportunities that you can look at and, you know, invest in them. I wouldn't be too aggressive because of what bond yields are doing, but I'd be looking in that area because you can see that's where the money's flowing.
Yep. But again, you've been talking about software for a while, and I think it's finally moving and it's doing what it needs to do basically. And yeah, I think you were right about that too. But here we are, man. But again, I'll say also be cautious, kind of what they said, like the bond yield and all that stuff. Like you really have to be cautious. You never know, when investors or big institutions gonna be like, you know what, I think it's time to break the bell and just do some circuit breakers. Hopefully, we don't get to circuit breakers, but let's just be cautious out there. But as we wrap up, man, just remember, like, opportunity comes when the market starts selling off and all this stuff. It's not a correction doesn't come to destroy opportunity, but it actually creates opportunity. So start looking at some of those good stocks that you were eyeing all this time. And I feel like we're a broken record. We repeat this thing every single time. The stock that you like, or over the past year that's been running like crazy, you couldn't afford to buy them. It's my good time to start looking at some of those stocks. And again, we don't chase, we don't panic. Manage your risk, know your levels, and let the market show you where the money is moving, like the rotating and all that stuff. And as always, everything we discussed tonight is not a financial advice. Make sure you do your own research, make your own decisions that fit your financial position. So make sure you guys make sure you guys do your research. We're just here to give you guys the information and break it down for you all to be able to give you kind of route to be able to follow. But as that being said, Wale, any last minute thing you want to share? Or we good to go?
No, I think we covered a lot of information. Like I said, I think that if you look past the headlines, again, if you just listen to our show, and we're basically spoon feeding you on where you should be looking. So I think someone texted me, DM'd me today. He said those software names that you mentioned are moving this week. You're welcome. So again, lots of information in the markets, but we've given you what the cloud play looks like for the
Yeah.
next couple of years and why these companies are investing so much money. We're telling you that we've seen the selling in the market, but software has been a winner so far. And we're also saying that you also still have to look at the macro backdrop of what's happening with bond yields. The longer we stay above those levels, the more dangerous it gets. So you just have to be cautious. Don't just be going out there just buying anything. As Billy said, you got to manage risk in that environment. It becomes a little bit more important.
Yep. Well, with that being said, we'll catch you guys on the next one. We'll see you guys on Friday. And yeah, please be careful tomorrow as you trade. And yeah, let's see what the market brings out tomorrow.